All right, morning, children. Let's get fired up here. All right. All right, last night's session, the S&P, we actually ended up getting a little bit of a sell-off toward the end of the session. We did bounce from maybe the last half an hour or hour's lows, but bottom line is we did manage to sell off a little bit on what was obviously the ECB really bringing out the bazooka on the day. I mean, we have, it says here ECB unexpectedly cut rates. I think the consensus was actually that they were going to cut rates. I think what they did that was unexpected was the asset purchase program. There was some speculation around that, but the market wasn't expecting it, I don't think. The fact that they did it and we still saw a correction out of the States, I think to me it really says something. I mean, look, this correction to me is not convincing enough for it to make any sort of sure thing that the markets are going to come down significantly today. But the fact that we didn't rally straight off the bat and that the Eurozone really just kind of held flat throughout the close of the session is significant to me. So anyway, we'll pay attention to that a little bit more going forward. All right, looking at the Asian session, we had all the markets down across the board, down light though, pretty small for the most part. Shanghai was the outlier there, and really showed a little bit of an update because there's a little bit of a stimulus plans that they announced to support the shipping sector there. Pretty much, every category of industry is really starting to really come under pressure in China. I think there's obviously big issues there. You can see it in some of the shares, like this morning in Australia, the listed mining stocks really just underperforming horribly. You see that across the board. You see it. You've even seen the gold prices, the gold shares that really sold off on the back of the asset purchase program, which in the past would have never happened. I think we've got to take note of that, and that's really, really, really interesting to me. So keep an eye on all these kind of things. That the fact that the traditional stocks that would have rallied under a stimulus setup didn't rally, and so that's going to be really interesting today and for the next couple of weeks to play out. So just watch it really closely. I think some of the people were probably buying in on some of the gold miners and some of those cyclical diversified miners like BHP and Anglos and Rio and that sort of thing, and they got absolutely no follow through in the afternoon yesterday, and they got no follow through in Asia this morning. So those guys will be sitting on the fence early, and could get really interesting if they start to get heavy early in the session today. All right. Chart of interest, the euro. The euro got absolutely hammered yesterday. We obviously knew that they were going to come with something significant. Like we said, they pretty much pulled out the bazooka, and so you saw the euro absolutely capitulate, maybe making a bit of a short-term bottom in the euro, I would think, simply because if you look at the open interest in the U.S. dollar at the moment, we're at the highest levels since I think 2013, early 2013 sometime. So kind of hard to continue to move the needle in its favor when the open interest is positioned the other way so much. So just keep an eye on that if you are currency trading. There's definitely we'll probably continue to see some weakness in the euro, but maybe need to have a little bit of a bounce first. All right, if we look at this morning, we've got Pinnacle, which comes out with earnings. We've also got a lot of stocks going ex-div on Monday. That's Barclays Group at 4 Rand, Nedbank at 4 Rand 60, Standard Bank at 2 Rand 59, ShopRite at 218, Exara at 260, Goldfields 20 cents, Truworths 1 Rand 69, and Woolworths at 1 Rand 50. So there's a hell of a lot of stocks going ex-divvy over the weekend. And I don't know, maybe a reason why our market can actually hold up on the day. We'll have to see. But our market's obviously been outperforming hugely of late. All right, we had German industrial production this morning, better than expected. The second German number in a row that was actually really solid. We had South African gross reserves and net reserves both looking a touch higher than expectations. We've got GDP out of the Eurozone at 11, and then in the States we've got non-farm payrolls, unemployment rate, and the underemployment rate. Obviously non-farm payrolls being the big one, and obviously going to be interesting there. If we see another really strong print out of the States today, then I think it's going to be real interesting to see what happens in the markets today, and we're going to have we'll start to really look at a real shift in policy in the U.S. while the rest of the world's kind of shifting the opposite way. It just makes things. I think it makes things exceptionally interesting going forward, and potentially opens the door for some wild moves. All right, let's get into the maps. First one we're going to look at here. Well, actually, hold on. Let's look here. This is the Aussie spot market here. We kind of, depending on how you draw this thing, we're right at resistance on the on a bit of a flag pattern there, but you can also look, we had set up, if you shorten this up, we'd set up a little bit of horizontal resistance that we had been failing at over several sessions now, that we really kind of broke through yesterday on the close. So you can look at it kind of both ways. I think we did get above some resistance, but we still may be right at some resistance as well. We're going to have to watch this to see how it plays out today, but it's going to be interesting to see if markets can give us some follow-through from yesterday's action. All right, the next one we're going to look at is Tiger Brands, and Tiger Brands finally popped up above this little resistance level at around 317, 316.50, something like that. You can see there we popped through on the close and popped through quite convincingly. I think that we've got probably significant upside on this, which is incredible. That we've been able to turn that this share has been able to turn the tide so hard, but bottom line is we're looking at about 20 rand upside potentially from that breakout. So be careful out there in Tiger Brands the next couple of days. CPI, we're looking at Capitec here. Capitec, we talked about this thing when it broke down below support here. We kind of just been consolidating in about a 7 or 8 rand range over the past few sessions. This thing obviously took a beating on the back of Able. It took a beating on the back of maybe some softer numbers out of people like Standard Bank in that as well, and some of the lower level lending that's been struggling out there. The likes of the RCS books and the from Fashini's and the lending from people like Trueworths and that have really been struggling on the lower end. So guys were really front running this share, selling the crap out of it, and then yesterday came out with a trading statement, definitely better than expected, upwards of 20%, and you saw a massive reversal up over 8%, I think, on the session, and probably going to take out the highs in the next few sessions. I can only imagine there's some stale shorts that are still out there. All right. If we look at MTN, I wanted to look at this on a 5-year chart. This looks a lot like kind of the Remgro chart that we showed yesterday, and we've just been in this uptrend now for the better part of 2 years, basically a full 2 years. We've been in this consistent uptrend in MTN. You bought this thing every time it floored out here. You made good cash and sold it every time it got to the top end of the range. You also made good cash. As you can see there, we zoom this thing forward a little bit. You can see that we broke out from here when we got above 240, and we've really been consolidating on top of what was that sort of resistance level there, and we've pushed higher, and we've just really gotten vertical in the last few sessions. I mean, if you take this, the movement that we've had since mid-August, the percentage move for MTN's been incredible. We did have earnings that catapulted it yesterday. We had some news that they sold some towers in Nigeria. We also have interconnection rate news as well. So there's a lot of bullish catalysts out there to really get the stock going. But bottom line is starting to get really vertical here, to the point that it's probably worth taking some profit if you're on the long side, and looking for an area potentially to fade this thing out, because it's gotten above all targets technically. All right. Sasol broke out yesterday from, I don't know what you want to call it. You can look at this a couple different ways. So to an extent, it almost kind of looks like it's making a little bit of a funny inverse head and shoulder pattern. But either way, you can also kind of look at it as an ugly flag. But if you want to look at the potential neckline maybe of an inverse head and shoulder, it doesn't give us a huge upside here necessarily. It doesn't look like a proper head and shoulder, inverse head and shoulder, because the left side here just doesn't pop much above the neckline. But either way, I think that is significant resistance, which we popped up above. I think this thing's probably going to come up and take out highs in the next few sessions if the market continues to be able to hold these sort of levels. Right. Next one that we'll look at here is Steinhoff. The last one we'll look at, in fact, is Steinhoff. And I wanted to look at this on a 5-day. I'm looking at the right chart here. What's going on? No, that's wrong. Why is it giving me the wrong chart? Oh, there we go. Okay, there's a 5-day on Steinhoff. And we really saw capitulation in Steinhoff. Yesterday we dropped below the 50 level in yesterday's session. It really just got ugly. You can see there, sold off down to below 49, and then after that, yesterday's session, right on the open, we spiked up initially as we failed it, and we took out those lows. That was the point to really jump on this thing. We pretty much did about 3% down from there in a straight line, so we were down about 4.5% on the day. Made a huge reversal to close up about 3.5 to 4% on the day, and it did it on massive volume. About if I'm not mistaken, about 40-odd million shares traded on the day yesterday. So to me, very, very significant. What is really significant here is, well, this thing's freaking taking so long, but this 51 level here is absolutely crucial. We need to get back above that level. You can see there, and yesterday, we did kind of get up to about 50.5 intraday. If we can take out 51 to the upside, I think that'll be about the point that this thing can really break out and start to move in a more bullish manner than we've seen in the recent days. And that's it for today, guys. Good luck out there.